In this video, I'm going to show you the Liquidity Pro Map by ChartPrime. It's a tool you can use to visualize where buy and sell liquidity is likely sitting on your chart, so you can anticipate support, resistance, and those classic sweeps with a lot more confidence. We're going to walk through what it is, how it works, and a few clean ways to use it in your trading. If you happen to find value in this video, remember to leave a like. Now, to get started with this indicator, you first of all want to go to TradingView, the platform I'm going to be using. If you need to sign up, there's a link in the video description for you to do that. Next, you want to load any market and time frame you like, click on Indicators, then type Liquidity Pro Map. It's going to be this one by ChartPrime. Add it to your chart, and you'll immediately see mirrored liquidity profiles appear on the right, green for buy side, red for sell side, with clear, readable shelves. Ladies and gentlemen, this is the all-powerful Liquidity Pro Map, a market structure tool that takes raw candle volume and turns it into a living map of where orders tend to cluster, where price has memory, and where reactions often happen. And here's the quick version so we're on the same page. Liquidity Pro Map splits historical price action into buy-side and sell-side profiles and stacks candle volume into price bins to simulate where liquidity sits. The brighter and more defined a shelf looks, the more concentrated that activity's been. You'll also see POC marks, points of control, flagging the single heaviest levels on each side. And just to make it extra usable day to day, it extends these levels backward until price crosses them, so untouched zones remain visible as magnets for potential sweeps later. Next, let's talk through the components you're actually seeing on the chart. First, those dual profiles. On the right edge, you'll notice mirrored shelves with green shading building out where buy-side liquidity concentrates and red shading where sell-side stacks up. Think of them as a quick X-ray of where demand or supply has shown up most persistently. Then we've got the POC levels. These are your gravitational centers, the single highest volume bins on each side. Price often gravitates to them or reacts sharply around them, so they're fantastic reference points. And running along the edge, you'll notice the cumulative skew lines, polylines that tell you at a glance who's winning the tug of war. A strong rising buy skew says buyers are absorbing sell pressure. A strong sell skew says the opposite. Finally, the extension logic takes each liquidity shelf and pushes it backward in time until it's actually crossed by price. If it never gets crossed, it just keeps extending all the way back to your look-back window, marking it as an untapped zone that price may want to sweep later. Now, something under the hood that really matters. Instead of throwing volume into rigid, static levels, the map uses a standard deviation-based reference around the close to distribute each candle's volume into bins. In plain English, it adapts to volatility. When markets wiggle more, the bins flex wider to capture that reality. When things calm down, they tighten. The end result is a more organic liquidity picture that feels closer to how order flow actually clusters, rather than forcing it into arbitrary steps. Let's pop into the settings for a second. You can adjust the look back to focus the map on the window that matters to you. Shorter look backs for scalps and intraday rotations, longer look backs for swing structure. And if you're the forensic type, you can bump the resolution for a more granular view of shelves and POCs, while the separator option can simplify the visuals if the bins feel too busy. I like to start with a moderate look back for context, then tighten it when I'm dialing in an entry so I'm not missing the trees for the forest. Try a few combos until the map clicks with how you trade. Once you're done, just click OK. All right, back to it. How do we actually use this thing to trade? Well, here are the conditions for a bullish trade. On a random day or at a random time period, I could just come to the market and identify areas where I see these green horizontal volume levels printed by the indicator. These are the buy-side liquidity shelves. They vary in brightness, and the brightest spot is the buy-side POC, the highest volume level. On this particular day, that POC showed a volume of 31.67K. So I come to a random day in the market and I first identify the level that's the brightest, labeling it properly as the POC. Because these levels can shift over time and because they represent support and liquidity, I'm going to grab my rectangle tool and capture that liquidity area, drawing it so it covers as many of the wicks as possible. Then I extend that gray rectangle to the right so I can keep tracking it even after the green shelves update later. Now I let the market play out, fast forwarding a bit, and the main idea is to wait for price to come back and touch my level, the green shelf I extended with the gray rectangle. I want the market to retest it by touching with a wick, It can also briefly close inside the rectangle and then immediately on the next candle close back above it, but it should never break below it. For this particular long position, we had a red candle that tagged our level with a wick, and immediately after that we saw a sign of bullish continuation. So for longs, we need that wick touch or the quick close inside then close back above, and after those conditions we wait for bullish continuation in the form of a bullish engulfing candle. Here we had that bullish engulfing candle, so our entry condition is met. We had a retest at a level of high significance, high liquidity, so we can take a long position. The stop loss goes right under the gray rectangle that represents that buy-side liquidity area, and the take profit is set to 1.5 times the risk. Then I let the trade run. As you can see, ladies and gentlemen, the trade was profitable. For a short position, we do the opposite. I look for the red horizontal volume levels printed by the indicator. These are the sell-side liquidity shelves. They vary in brightness, and the brightest spot is the sell-side POC, the highest volume level. On this day, that POC showed a volume of POC volume. Since these shelves can shift and they act as resistance in liquidity, I grab my rectangle tool, box in that area to cover as many wicks as possible, and extend the gray rectangle to the right so I can keep tracking it even after the red shelves update later. Now, I let the market play out. I'm waiting for price to retest my level, the red shelf I marked with the rectangle, preferably with a wick. It can briefly close inside the rectangle and then on the next candle close back below it, but it should never break above it. In this short example, a green candle tagged the level with a wick, and we immediately saw bearish continuation. For shorts, that wick touch or the quick close inside then close back below sets the stage. Then I want a bearish engulfing candle to trigger the entry. With the retest at a high liquidity level confirmed, I take the short, set the stop loss just above the gray rectangle, and set the take profit at 1.5 times the risk. I let the trade run, and as you can see, ladies and gentlemen, the trade was profitable. In summary, Liquidity Pro Map takes messy volume and turns it into a clear, adaptive picture of where buy and sell orders have actually mattered. You get mirrored profiles to frame support and resistance, extended untapped zones that act like magnets, POC levels for gravity centers, and skew lines to read absorption in real time. Use it for the where, layer your own triggers for the when, and let the map keep you honest about location so you're not trading in the middle of nowhere. This is not financial advice. Everything shown here is for educational purposes only. Indicators are tools, not full strategies. Make sure you add your own price action, risk management, and if it fits your process, fundamentals or macro context before risking real capital. If you found value in this video, remember to leave a like, or even better, consider subscribing to stay tuned. Thanks for watching. See you next time.